Okay, so this is Friday's price action right here. I'm just going to go over the continuation model I saw a lot of people take today and it ended up losing or break even if you manage your trade well. I faded it out. I ended up not taking it because this is a fake continuation that will play out only probably like 30% of the time ever, especially in the condition that we're at right now. So I just kind of want to go over what went wrong and what to look for next time. So overall, coming into Friday, I think everybody was bullish, right? We came down into this big 4 hour gap, respected above the CE of it. We respected the premium of that gap, and then we push up pre-market, taking out the all-time high. And then from there, you move down to the hourly. You can see here we had this hourly intermediate low just resting down below current price action, and we were trading at all-time highs. We kind of had this low resistance liquidity leading down towards that hourly intermediate low. So for me personally, my idea today was, where is it? Here it is. My idea today was I want to see price open up, possibly create a new all-time high or leave this current all-time high, move down towards this gap, and then we get some kind of internal structure sweep of this range right here, and we kind of stay around 0.5 of this range, around EQ of this range, respect this hourly intermediate low, and then we get a really big bullish push up, kind of disrespecting more than 50% of this bearish. Like I want to see a push up fast, just confirming, especially on a Friday, that we're just gonna rip towards all-time highs, and we're trying to discover some new price, right? And from here, just kind of look for a continuation up. So that was my idea going into the day. You can see that's not what happened at all. Pretty unfortunate. The market just opens up, and we end up just like absolutely just chopping up, discovering new price. Around here is when we first hit the 35 or the 30,500 mark, which is an important retail level. Kind of every 500 mark on the Nasdaq is an important retail level. So those are levels to watch price to trade back to, or you can target if price is trading below that level and we're extremely bullish. But here is what I want to focus on, right? I want to focus on 10 a.m. Where's 10 a.m.? Here it is. 10 a.m. opens right here, right? Boom. 10 a.m. So we have 10 a.m. open. Now, what do we see 10 a.m. do, right? We see 10 a.m. leave these double equal highs, and we see it start trading lower, right? And all throughout here, I was looking for longs, which is valid. If you're looking for longs off this more premium 15-minute gap, that's completely valid because if we're holding this more premium gap and we're showing continuations up, this is a high time frame significant key level, and since we're showing these continuation conditions up, then I'm just expecting all-time high to be taken again and us to just continue discovering new price, right? But we end up respecting that 2-minute. We end up just kind of dumping back down, dumping, 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 right? Okay, so here was the trade that a lot of people took, right here. It was this 2-minute inversion. So let me just break down this trade real quick. Okay. So what is price rejecting off of, right? So price moved all the way down into this most discounted 30-minute gap right here. So we moved down into a discounted 30-minute gap that is sponsored by this hourly gap down below. This hourly gap is also sponsored by this 4-hour gap down below, meaning we're in like insanely bullish order flow, right? So obviously extremely bullish, pretty obvious that we're going to keep going up from here, right? What do we have next? Well, we have our 915 open up, move lower, generate liquidity, and then we have a expected 930 close continuation higher. So 915 manipulation, 930 continuation, right? What else do we have? We have this clean 2-minute inversion with this rejection wick on the swing below. So we're rejecting off of this 30-minute imbalance, close clean above CE, close clean above the entire gap, rejecting it perfectly. And at the same time, ES did look like the same thing. I don't want to pull it up because I don't have the replay on, but it looks similar to this. Like ES was showing bullish structure too. So on top of this, what else do we have? We had stacked 5-minute gaps above, right? A reason for price to go higher. So in a scenario like this, if you're not completely confident in this trade, you could expect price to at least return to one of these 5-minute gaps after rejecting off this discounted 30-minute to then continue lower if you're not fully confident in us ripping back up to all-time highs. Now the problem with this trade is this idea right here. So technically, this is a continuation setup, right? Because you're continuing the higher time frame trend, and you're trading off of price displacing out of a discounted gap to continue to a high that it just recently created. So this is a continuation setup. This is a low probability continuation setup for two reasons. The amount of points we displace down being one, and the second reason being the structure of this continuation. This is a fake continuation model, and these never play out. I've backtested them 100 times. These never play out. So the first thing you can see is right here. We see the 930 candle. Market opens and displaces how high? We displace 170 points towards the upside. 10 a.m. opens, and we immediately disrespect that entire bearish leg, leaving only like 3 bullish swings above, right? So we're not even generating any like relatively strong LRL. We're just generating these 5-minute imbalances that are weak. But given our current narrative, this is where you should have flipped bearish on the day, right? Because if we're pumping up 170 points, creating a new all-time high, and then we're fully disrespecting that leg down, this is bearish signal from the market that we want to go lower and we want to seek liquidity to then go higher, right? So let me draw this out. So for example, the market is like this, right? There's a 4-hour fair value gap down here. And then the market opens up. We move here. We create a new all-time high. We move here. We move here. And then we disrespect this entire leg like this, right? Just because you're seeing price kind of give a little reaction off of this fair value gap, you're failing to see the higher time frame narrative of this move. Because this is not a small move. This is not like an 80-point move. This is a 200-point move towards the downside, completely reverting the entire pre-10 a.m. leg, right? So in this scenario, what the true narrative is, price comes back up, and then we seek a higher time frame significant key level to then move higher and take out the all-time highs, right? So I remove all this. Now I want to talk about the fake continuation, right? So you already know the whole this leg disrespected this entire leg. What you want to see in a proper continuation is you want to see a high time frame PEA get respected, right? So you want to see your high time frame PEA get respected like this. You want to see price move up, and you want to see us create a sponsored fair value gap or a higher time frame significant key level PDA, trade back into it, and then get your inversion to then target higher prices, right? So this is what you're looking for in a textbook continuation model. These are the continuations you want to be taking because price is respecting these internal range levels, right? But for example, in this continuation trade, we completely disrespect the entire range, right? So this is looking something like this. We create our level being that 15-minute gap, the more premium one, we create it, and look what price does. Price moves here, fails to hit, delivers off this 2-minute gap, and runs through the entire range, right? And now this is where you're looking for your continuation. On this day, this is a fake continuation. This is not the structure you want to see in a continuation. Every time you want to take a continuation, you want to see price respecting EQ of the range, and you want to see price respecting these more premium gaps to then head higher to previous draws made, right? But in this scenario, we disrespect this entire bearish leg completely, and we displace into this more discounted 30-minute gap. And I've seen people make the argument, yeah, like it's fine, you can trade towards these 5-minute gaps, but that's irrelevant because overall, it's lower probability of you even entering like off it in V-shaped 2 inversion here with like pretty much no valid structure given to it. Like you're gonna get stopped out every single time you take this. These are low probability trades. These are fake inversions. Do not take these trades.